This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 247 is brought to us by Bybit. You might not know this, but a lot of things are moving and starting to move. This is the perfect time to get back into trading if you have taken some time off. I don't know why people take time off. You were supposed to just keep trading through this, but volumes are down. So if this applies to you, get back in the game and get on the best platform in all the world, which constantly rewards you simply for trading with them. The best way to do that is to sign up through my link. You get even more rewards that way. And you do that by going down to the Bybit blog, which is down below in the show notes. Read over the blog, make sure it's for you, it will be. And then sign up through my link, get deposited, get trading. Investors are not having a good time right now, but traders are. I've said this many times and will continue to. And I've also said many times and will continue to that with Bybit, membership has its rewards. It is the 10-Minute Contrarian Podcast, and I really don't like spending this much time on one thing. But the war in the Middle East is just what's going on right now. And it is affecting markets we like to invest in. And there is potential out there, real potential. We'll talk about how real in a moment, that this could be the catalyst for the next big recession. And so I thought now would be a good time. Again, we've talked about some of these things to a degree, but today we'll really break down the possibility when it comes to something like this causing something greater down the line. We'll talk about really the possibilities of the yes happening and the no happening. But first, let's kind of recap what's happened so far as it pertains to how the markets have been affected. If you go back to the big energy episode that we did here in January, one of the things I really harped on the most was oil. I was like, all right, contrarians, look, I know people get frustrated with oil because it just doesn't seem to move. But you need to take the gift here, because when these things move, they move. It doesn't matter until it does. And just because it doesn't matter right now, well, that's exactly the time when you should be investing. I told you I was getting into oil, and then I don't know if it was before or after. I am not known to front run Rick Rule, so it's probably before. But Rick Rule said that he was getting heavy into oil, while most investors out there, and probably most of you, were just like, no, oil, boring. Not interested. It's all about metals right now. It's all about crypto. Doing it wrong. You really need to be everywhere. Because during this time, I can tell you that my stock portfolio, for the most part, has gone down, but oil has saved it in a lot of ways. At least saved it from going down further as a whole. Crypto hasn't done much, but again, we'll talk a bit more about things like that later on. But I will continue to say what I always say here. Oil is life. You can't sleep on this. Remember those dumbass environmentalists, like not even 5, 6, 7, 8 years ago, saying how we really should reduce oil all the way down to nothing and how we have the energy sources to fully replace it at this point? Well, all right, turn those things on. Everything should be fine then, right? Go ahead. Yeah, turn them on. Why is this war even a big deal? I mean, on planet Earth, we are so far from being there yet in terms of being able to really fully replace oil, or even partially replace it in a lot of ways. And so I want you guys to remember this time. Remember again, we take a 5 to 10 year view. We are looking more towards, all right, what inputs and what materials are going to be critical for the coming future, the coming electrical grid. It's going to need materials, it's going to need power. Which materials and which power sources are going to be critical here? If you don't include oil in that mix, you're crazy. And you're not early, you're just plain crazy. Just because the current administrations, I say that plural, were able to keep oil down at a good price for a pretty long time. I'll say it again. It doesn't matter until it matters. And you were supposed to be an investor during the times where it, quote, doesn't matter and nobody cares. Not after. Now, in terms of other energy sources, it's been really interesting. Like nat gas hasn't really done much of anything because that's not the story here. That's not the problem. That's not the shortage. Nat gas is more of kind of a Western story. So, North America, Europe. But there could be some ripple effects here if things get out of control with what Putin wants to do with natural gas, because now he has a little bit of extra leverage that he may have not had before. Now, again, I don't want to prognosticate too far here, but it's just one of those stories that I'm kind of looking at in terms of actual energy. But it's really just been oil. Like renewables haven't moved, uranium's gone down. But again, even when it comes to alternate energy sources, they don't matter until they do. So, when you have all of these things going on right now that are either going down or nobody cares about them, i.e., metals, crypto, might be the time to start looking at those things. Not financial advice, just saying. Like, nobody's paying attention to those right now. And if they are, it's gold and silver bugs crying that gold and silver is falling. Like, why would you cry about that? Buy more. This is totally normal for something like this to happen. We have spoken about this before, contrarians, many times. We've had several recession episodes on this podcast, not in terms of saying, hey, we think recession is happening, but just really preparing for the possibility of that happening. And I always say here, in the early stages of a recession, everything sells off and cash is the only thing to go up. And that includes even precious metals. People freak out and they sell off literally everything. Now, history, every single time this happens, has proven just what a bad idea that is. But it does give the smart people buying opportunities, and like sometimes generational buying opportunities. But again, we should probably at this point go ahead and start going over both possible scenarios, the way I see it, at least, and then talk about the game plan for each one. So the first scenario is, in my opinion, the more probable one. Now, keep in mind, I don't hang my hat on my midterm predictions. I mean, I do my midterm prediction shows in January, but I always throw it out there. I'm like, look, man, this is not the way I invest. We're just kind of having fun here, kind of trying to set up the year, blah, blah, blah. And this is more or less what I'm doing here. I hang my hat on my long-term predictions. And I will also add that I am positioned really for either scenario. And I would hope you are too. Sometimes that positioning means that, okay, we're going to be fine with our portfolio going down some, because that's just what happens. But we here at the 10-Minute Contrarian podcast really are kind of positioned for the worst, to where regardless, we should come out on top by quite a good margin. So whichever one happens, we should be fine, assuming you're positioned correctly. Even though we're all going to eat some pain, we will actually be more primed to take advantage of what could be, like, again, generational opportunities here. We just don't know yet. But let's talk about scenario number one, and this is the one I've been referring to. I still lean towards this not being what the public is mostly fearing here. Again, I am not an expert on any of this war stuff. Really, nobody is. I'm actually not going to pretend like I am, which is apparently strange, but, the line of thinking I've been leaning on all year is how Trump needs to win the midterms. If the United States stays in this war for too long and things really get even more out of control, he can all but kiss that goodbye. And even though the Democrats may not have a majority, they're still going to try to impeach him. You can sit there and debate how probable that might actually be. I don't know. That's above my pay grade. But what it will certainly do is impede a lot of the things he's been trying to do this whole time. So what I can say is, if I was on that team, I would certainly want this war to end as soon as possible. So they're going to at least try. And if it does, quote, end or really, really die out, you can absolutely expect things to correct in the market, at least midterm. All of these second and third order effects that people are concerned about, we don't know when things like that will happen. People have an idea, and that's fine. Everybody has their own ideas, but trust me, Wall Street is just sitting and praying that the United States can put an end to this much sooner than later, because if and when they eventually do, these guys on Wall Street definitely, more than anything, need their clients' portfolios to rebound. Remember, this freaks out Wall Street, especially now, because Wall Street just doesn't really know how to deal with this because they hardly ever have to. I mean, you have younger guys on Wall Street now that have never seen a time like this, to where things really feel like they're hanging in the balance. I mean, maybe 2020, but if you remember, the bounce back from that was so quick. And why was it quick? Because of stimulus, which is also going to be on the table. Not just on the table, I would put the probability of that happening as super, super high. I said that early on in the year before this war even popped off, that the printer was going to be turned on. Now I feel like, I hate using this word, but it would almost be a certainty, simply because the administration would just have to do that at this point. And if there's one thing Wall Street likes more than getting out of a war, it's stimulus. And it may not make sense that the stock market would go up as much as it would, but Wall Street always does things that really don't make any sense in the long term. And they're going to jump at the chance to do that here. Trust me, they're getting calls from their clients, freaking out, saying, why is my portfolio going down? Why aren't you doing something about this? Now, when we do recession episodes here on the show, we talk about all of the reasons why a recession is very much due to happen. And I really don't think Wall Street is clueless to this, but they just don't care. They have their quarterlies to make. They have their yearlies to make. They have their clients to please. They have their competition to outdo. They don't get the privilege of being able to play the long game like we can. They're forced into this box. So while the whole world is wondering, why is the market doing so well and hitting all these all-time highs when the actual economy is obviously not that great, well, this is the reason why. Wall Street's reaction and the stimulus that always ends up coming. And if you don't think this is going to have any effect, I will point you to not even a week or so ago when Trump came out and said that the war is almost over. I think it was on the blog. By the way, I do have a blog on Substack. It's new. Link down below. Go check it out. But on the blog, I said, this really feels like 2 weeks to flatten the curve all over again. I'll believe it when I see it. But if you remember, I don't know if you were paying attention to this, but all he did is simply come out and say that. And on that day, the price of Brent crude dropped $30. So for all the people out there on social media flipping out and saying, no matter what happens, oh my God, it's all over. Markets many, many times over and over again, almost like clockwork, tend to make these people look silly. This would probably be the first time in recorded history where everybody was saying that we're going down, and then we actually did. Remember, recessions kind of come out of nowhere. They're really when everybody's feeling amazing, not when everybody's running around with their hair on fire. So that's scenario number one, and that's the scenario I would still lean to. But scenario two is all of these people are actually right. And the second and third order effects, mainly food, really end up sparking a major downturn in world economies. And the only reason I think this is actually plausible is because we are talking about oil. And oil is life. It is the world economy. It is the nuts and bolts of kind of everything that goes on. And when it gets tampered with, and if supply really is this choked off to a degree, and much of the world, and by world I mean this is mostly an Eastern Hemisphere problem, but if they really can't find another way, then yes, this could end up being a problem that even markets just can't ignore. I mean, you do have some people out there, and these are not dumb people, these are oil people, saying that there is a possibility of oil going up to $200 and not moving from there for a while. And what something like that would do to the economy, I mean, they're saying it could be really horrible. I can certainly see a scenario where that could be the case. Now, again, this is not a place we have been since the 1970s. And they keep trying to compare it to the 1970s. Times are different. I see what they're doing. But there's very few positives to $200 oil. I will say that. And I can certainly imagine this being really bad for food. Starting in the Eastern Hemisphere and then possibly spidering out to other places. Now, I'm really careful when I say this. I don't like to take world tragedies and then pointing to those places and laughing, saying, ha ha, I told you so, you should have done what I said to do and move here. I saw this firsthand with certain social media accounts I used to respect back during the mini crises of Mexico and then later Dubai. I'm like, I even DM'd some of those guys. I'm like, guys, this is not the way. And a couple of them at least appeared to take my words to heart, which I was happy to see. But I will say what I have said in the past, at least when it comes to energy and food. The Western Hemisphere is going to be a lot more insulated from problems like this because they are a lot more energy sufficient and also food sufficient. The majority of large countries in the Western Hemisphere are net exporters of food. And the United States and Canada are net exporters of energy, as is Venezuela, which the Western Hemisphere has now gotten over to their side. Remember, most of that oil was going to Russia and China. Now it's not. And this is why, and also, the grand plan that this particular U.S. administration has for the Western Hemisphere, this is why I am so bullish on it as far as a place to where no matter where you are in the world, you should probably have some stake in. And not just in terms of investing, in terms of your own agility. But again, I want to get away from that. Again, a lot of people don't make these moves because, as this is kind of the theme of today's episode, it doesn't matter until it does. And the big scare right now, at least from an energy and a food perspective, is not happening in the Western Hemisphere. At least not yet. A lot of these countries did not put a lot into their own version of the SBR like we have in the United States. Now, the United States is getting caught with their pants down too. We've talked before how much Biden drained that thing just to get his own midterms won. And then Trump comes along and doesn't really fill it back up. So we'll see what happens there. But at least a country like the United States can get away with that for a little while. There's certain countries we're learning right now are already, like how long has this war been going on? Like a month? Who are already like, we are running out of energy. And many of us just have not seen a time where this is the case, and we have not been able to see what happens when you simply don't have the energy you need. We just don't know. And we might experience that. So China, for example, you guys know, I always say China is the most interesting country in the world economically, by far. When it comes to monitoring the situation, I've been more staying on top of China than anywhere else. And I can tell you, even though the market doesn't always reflect this, the cracks in China's economy are getting bigger and bigger and bigger, which means something like this might really exacerbate that. And even if in the United States, Wall Street wants to play their Wall Street games, a crashing China, in my opinion, is just not something the rest of the world's going to be able to overcome. So if this whole thing does really end up being one big domino effect, those are the dominoes I want you to watch out for. Food, and then ultimately China. Now, I do want to say this too. I want to throw these counters out there because I just don't think people think about this or even really remember this. But do you guys remember many moons ago when Russia invaded Ukraine? And how they talked about how much food and wheat and all that comes out of Ukraine and how it's going to be so horrible and people are going to go without and we're going to have this big food and fertilizer crisis. We're still kind of waiting for that. Now, this may not be an apples-to-apples comparison, I understand. I'm more referring to the hysteria that followed and how people were so certain this was going to just have these horrible effects, these ripple effects all across the world. and they never really materialized. Maybe on a small scale, but they never got to where people thought they were going to get to. But then again, oil is oil. You can't really fuck with oil that way. It's still way too important. So that's why I'm still a bit torn, but I do lean more towards the more positive scenario number one. But that being said, it's probably time we get into the solutions portion. I feel like the solutions should be obvious to all of you by now, but when you have moments like this and emotions are high and everybody's running around acting like huge bitches all the time, maybe, just maybe, this level of bitch-assery is making its way over to rational-minded people like us. I have actually seen this start to happen within my own community. I'm seeing it in YouTube comments, I'm seeing it on X, I'm seeing it on Discord. And this level of fear and dread should not be happening to us because you should be positioned for this. And if you're not, then the very least you can do is take advantage of the opportunities that crises like this give you. Remember, you're supposed to buy low or buy on dips. And if you look back to every time in history where things were cheap, like mega cheap, I promise you, at every single one of those times, sentiment was either just really apathetic or often completely freaking out over the future possibility of what might happen in those particular asset classes. Most people don't ever buy at those lows or near them because they're scared to. Now, again, you can use your charts here as a weapon. If you really are scared about things dropping further, I'm not. I'm very bullish on all of the things I own long term, so it's not a problem. But if you're buying for the first time, just know that if you're really concerned about prices dropping even further, then maybe just go half in now. And if you're right about that, then put in the other half at lower prices. Just know, low prices are low because people are either scared or apathetic. And if price goes lower, that's not going to all of a sudden change. So again, it's never going to feel good to buy these things, but that's what buying low is all about. Just never forget that. Second, I hope everybody took my advice before and made sure they had a good amount of investable cash ready to deploy, because crises like this are prime times to do that. Whether it ends up, whether we're seeing the lowest of the lows right now or whether it is going to get a lot worse. This is why you have that cash. When I did the episode talking about my personal allocation and I said I had 25% cash, I actually saw a lot of you, my own people, go to YouTube and Discord and more or less brag. Remember, this is back when metals and crypto were both seeing like some really nice highs. You were saying, well, I have almost all of my money in metals, or I have it all in crypto. I barely have 1% in cash. Look at me. I'm so smart. Cash is trash. And I'm like, okay, it's your money. It's your choice where it goes. All I can tell you now is I'm really glad I didn't make that decision. Now, my timing was kind of bad with the cash I did spend last year on things outside of the market. I bought other investments that I've talked about a bit on the show. And so I was a bit cash poor there for a while, but I've gotten those reserves back up. Not all the way, but decently. And this will be the cash to get me through whatever type of elongated recession might or might not be coming. And it will also give me dry powder to deploy on things I am very bullish 5 to 10 years ahead on, probably at really great prices. Because something I said in the very early episodes of this podcast, and I still feel the same way. It's like, hey, I never got to be that guy who has investable cash to deploy during an actual recession. I couldn't do it back in 2008. I wanted to, but I just didn't have the money. I was a broke waiter who had bought his condo at the very top of the market, and I was completely screwed. Now, close to 20 years later, I've gotten out of that hole, gratefully. And I will be damned if I am not able to take advantage of whatever recession is coming next, whenever it comes. Again, cash is the same as oil or metals or Bitcoin. It doesn't matter until it does. So you always need to have it. Just like gold, just like Bitcoin, just like energy. And I'm confident there will come a day where blockchain technology does become the norm. And we're going to be very glad we had almost 10 years to buy these things at super cheap prices back when the whole world was shitting on it and giving up, because they do not share the same approach as us. The problem is, and the problem I've been seeing during this time, is you guys, you beautiful contrarians with your wonderful long-term views, are allowing yourselves to fall into mushy middle, we are affected by everything all the time ways of thinking. Don't do it. Again, if you had cash, this wouldn't be a problem. But if you had 99% of your money in certain asset classes, well, yeah, now at some point you're going to be forced to do what you should never do, and that is sell at or near the bottom just to get liquid. Like, that's not the way. So I know since this podcast has been in existence that we've enjoyed more good times than bad times. So it takes times like this for me to remind everybody, hey, look, man, you should be positioned for this, because if you are in a very good position. Now it's just a matter of pulling the trigger and realizing the gift we have and the greater gift we may have down the road. Not from a society point of view, but from an investing point of view, certainly. Because to most of the world, it seems like right now only crazy people are buyers of anything. But we understand that you pretty much have to be crazy if you're ever going to be early.